I have invested almost 1 crore in mutual funds out of my overall portfolio of 4.5 crores. In that 1 crore, 30% is in international funds, 20% is in index funds, 30 to 40% in thematic funds. Remaining 10-15% is in mid cap and small cap. Through this video, I'll be able to tell you what was my purpose behind doing this and the overall journey which shaped me to really make these calls to invest in these specific themes. So 30% is in international markets, because we should not constrain ourselves only to one geography location. And that's where I started in emerging funds in Asian markets, Chinese markets, Latin American markets, some of the African markets. All economies don't grow simultaneously. There are some economies goes faster. And that's the right time where you also invest, right? Now, how is the trend for AI? So that is the trend for economies which are growing. That's where a lot of FIIs are moving across, where there is a growth potential. That's where they grow. And then next 20% is in index funds. Okay, index funds includes Indian markets as well as Hang Seng Index, NYSE, Nasdaq, and as well as Singapore Stock Exchange. So I have and Japanese Stock Exchange. So I have mix of indexes. I have invested 20% of all my mutual funds. Remaining 50% in that 10%, I believe in healthcare and pharma, because the future healthcare pharma looks so critical for, right? Everyone is emotional about it. If something happens in your family to someone, right, you don't mind rescuing them, right? And you end up paying whatever for that. So healthcare pharma is something which I believe in. And then next comes the technology and AI. There's a lot of boom which is happening, and technology AI is what is changing the trends across. So that's the next 10% I have done. Now that next 10% I have put it across in minerals and rare earth metals, because minerals, rare earth metals, these are very limited. You cannot overnight produce, all this mining and everything. So probably you can discover, but so that's where I felt, this is very important. 10% has gone there. Another 10% I have invested in basically specific into consumerism, right? We humans are driven by consumerism, FMCG, consumer-driven products, foods, everything I have put 10%. Last 10% into mutual funds, which are into, which they cater to small cap, mid cap. That's the last 10%. This is what I've done. I started investing almost from 2012, 13 onwards, started investing around 3,000, 4,000 rupees in mutual funds. And that's where the journey started. From 2016, 17 onwards, I started switching over to lump sum investments, because SIPs are always specific to one fund and to one thematic, one exclusive. But let's say there's a new government policy, new government has been formed, new policy has come in, and you want to break that SIP, it's not good. So I felt rather than putting SIP completely, now I will switch over, change my gears, and focus on what is going to be the next trend, what is future looks like. Then that's where I started parking my money. Like, okay, probably this 6 months I focus on these funds. Next 6 months, based on the trend, I change, right? So started curating and being very agile in terms of changing my fund investments, rather than not getting stuck. Because initial days was about discipline, conservative, slow, and that's where I was doing SIP. But as my money savings increased, I started changing my gears. Rather than SIP, I change over to capture that moment and start investing. So that's where in 2020, I cleared my loans. And from then, I went into pure investments, close to 60-70%. From then, my investments started directly into mutual funds, getting into ETFs, okay, getting into a little bit amount of stocks, okay, and bonds. I started diversifying myself, REITs. That's where I started diversifying from then. Now, currently, almost, I would say, 30% is into real estate of my 100% portfolio, and 20 to 30% is in mutual funds, okay, and 20% is in bonds, okay, 10% is in equities, 10% is in metals, basically bullion, basically gold and silver. I have parked. I would say almost a CAGR of average 20 to 22% I have seen. It's amazing, right? If you're getting 20% on an average CAGR, and that where I felt, let me stay continued in this. Because I looked back how these investment managers, fund managers, wealth managers, they really research about something, right? They read, probably World Economic Forum's reports. right? World global organizations. And what would be the long-term plan for US economy or European economies? What are they looking at? Like, for example, next by 2030 or 28, probably it might be plus or minus. Like Europe says negative neutral for all the companies into manufacturing. The carbon footprint should be negative or neutral. That's a goal. So what are those specific changes are happening in governments? What policies are they bringing in, right? And what are the common themes? Healthcare is a big investment. Every now growing economies or developed economies, they're investing big time because aging population is there. At aging population, what you need, right? Like a lot of startups are into these healthcare, medtech, right? Look at it, right? I mean, what is for people, what is non-negotiable? Okay, when I say non-negotiable, basically, let's say education, is it non-negotiable for you? And also look at where is now, for example, the exposure to smartphones, the media was limited. Now completely is, we cannot be out of media or we cannot be out of internet, right, today in this era, right? Everything is dependent on something, right? Identify that, what is that dependency? And start investing on that. For example, food is going to be scarce, right? Now everyone is switching over to agri, right? So everyone is talking about agri-tech, right? Everyone talking about organic foods, right? Everyone is talking about, can I get pesticide-free foods, right? So start looking at it. What are we consuming? Where will be the more consumption in the future? I think that should be the mindset for the people where they want to invest, right? And where the large corporations, large world players are looking at it, right? For example, whenever there is a crisis, what people do, where do they invest, right? For example, gold, for example, right? So try to see the trends, try to see what are people behaviors. Again, it's psychological, I'm telling you, right? Look at the human psychology, because entire investment is human psychology. So look at it and start investing accordingly based on that. As a beginner, right, you're still learning, and if you want to be conservative, to go east, index funds is the best bet, and then large cap. And once you slowly, gradually feel comfortable, you feel you started making more savings, more money, now you are okay, you have good bank balances, then go to mid cap, small cap, and then do thematic funds, gradually grow into it. So go with this first, and then gradually you start experimenting, taking little more risk. And that's how you should go for. Jumping fully risk, I'm okay still. If you have an appetite, you have a good backup, you have good pedigree, and then go for it, But when you don't have pedigree, when you come from scratch, then you have to, ensure you also win the match. Portfolio is not to keep creating portfolio in numbers and in Excel sheets. I think that should be an outcome of what, right? But it cannot be the only reality that, okay, you live by only Excel sheets. Excel sheets are helping to curate and enable you to start living your life, right? Imagine you are in a trip. Analogy is like you are in a trip. Every minute you are checking your fuel indicator. Are you really enjoying your trip then? No, you're not enjoying. You know that destiny is next 200 kilometers. What is your mileage, How much fuel you need to fill in. That's it. If you're aware fundamentally these things, then you should enjoy your trip. Worried about fuel station, where is the next fuel station, how much mileage it is giving, then when are you enjoying your trip? So this is what is also about portfolio. You should enjoy your trip. Also checks and balances sometime. Yeah, this is what I would tell to my fellow people who are watching this.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.